we look at the introductory section and you're told that you are a senior manager in Fizz, which is a large company that manufactures soft drinks. So it'll be confirmed later on in the pre-scene. We can say though that this is a company with no retail presence. So they're not dealing directly with the end consumer. Of course, they do need to keep the end consumer in mind. They're designing products that are sold to the end consumer. They need to take into account changing consumer tastes. This is a market where consumer tastes are changing rapidly. If they don't have their finger on the pulse of those changing consumer tastes, they'll lose their way quickly. So this is a company manufacturing soft drinks, and between Fizz and the end consumer, you have a number of important players. The retailers are dealing directly with the customer. Those we will see would be companies like supermarkets and bars, restaurants, cafeterias, etc. And even before that, you have another step in the chain where you have wholesalers and other companies that actually buy from Fizz and then sell on to the retailer. So Fizz has its office in Northland, this fictional country. We're not sure where it's located at all. And they are quoted on the Northland Stock Exchange. Of course, when it comes to being listed publicly on a stock exchange, there are a number of pros and cons. You think about the pros of a stock market listed company and you would say that there are reputational advantages to being a listed company. There is a certain sense that this is a company that has gone through a rigorous process to publish its shares for sale on the open market, and that they have their house in order. They've been analysed and examined by the investing community and they've been given the green light. So certainly reputation is enhanced, and of course there is access to additional funding. A company that is listed on a stock exchange is not reliant on debt financing. They can access equity financing too. The cons of being a publicly listed company, some of them would be that, first of all, equity is actually a more expensive form of financing than debt. With debt, you can deduce it from your pre-tax profits. So there is a tax advantage to doing so. And also with equity, the issue is you're giving away a share of your company, a share of your profits forever. With debt, there is a finite amount of payment that you have to pay out to the banks or whoever it is you're borrowing from. But once that term ends, your obligation stops. It's not the same with equity, where you have an obligation to your shareholders for life. Of course, as well, you have onerous regulations with a stock market listing. There are financial statements that need to be produced on a quarterly basis, and in general, you are subject to a level of scrutiny that a private company would not be subject to. Analysts are constantly evaluating the prospects of the stock and subjecting the leaders of the company to questions on analyst calls, quarterly analyst calls, things like that. You have external pressure to deal with from your shareholders. They're an important stakeholder and they have expectations regarding dividend payouts and the future direction of the company, etc. We're told then that you, as senior manager in Fizz, are directly reporting to the board, and you have two main areas of responsibility. You advise on special projects and also on strategic matters. So SEMA gives a little bit of direction regarding the role that you occupy on the different case studies. At operational level, you are quite a junior player in the company. You're going to have a short-term focus, dealing with day-to-day issues and the execution of daily tasks. When it comes to the management level, you are a mid-level manager. You interact a little bit more with top management, but your focus is on the medium term. You're still involved in overseeing the execution of strategy that the people higher up on the board of directors, etc., are defining. But at this level, the final level, you have a long-term focus. You have a strategic responsibility at this company. You're a senior manager and you're helping shape the strategy of the company with a focus of 3 to 5 years and beyond. People and leadership skills are very important at this level. They represent a greater percentage of the total skills SEMA is looking for you to exhibit. You'll remember technical and business skills are the other two skills you're meant to demonstrate. Technical at the operational and management level was much more important than it is now. It is an even split between the four skills of 25% at this level. Your audience are, as I mentioned before, senior leaders at the company. In other words, the board. You're directly reporting to them. You have to influence board members and interact with them on a daily basis. You can expect during the exam to be receiving requests directly from the CEO, from the CFO, etc. And it's important at this level that you understand the full context in which the business operates. That means you're expected to really understand the industry, the environment in which the business moves, and you're expected to engage with external stakeholders, so shareholders, government, the wider community. You're expected to have a handle on how to deal with those stakeholders. Thinking about your objective tests, E3, P3 and F3 at the strategic level, and some of the big areas that would be applied to the case study coming from those three areas would be as follows. For E3, it's a lot to do with recommending strategic options. So you're listing pros and cons of various options and giving a final recommendation at this level. That was not the case, certainly at operational level. It became maybe a little bit more important at management level. So it's very much about weighing up the pros and cons of an issue and then saying, okay, we've got to do A, B or C for the following reasons. P3, it's a lot about risk. This particular case study has a risk register that's been defined by the board. They have their eye on risks and they're looking to manage them in the right way, and you're expected to reflect on those risks and again give recommendations. And with F3 then, some of the really important areas in the case study coming from F3 relate to adequate long-term funding and the overall financial strategy of the firm. And then in the final part of this section, we're told that Northland is using the N dollar. And we've instantly got to think, if this is a company dealing with suppliers, customers in other countries, we're going to be looking at exchange rate risk, which is important at this level. And if this is a company in the manufacture of soft drinks, they're going to be using a commodity like sugar, where price volatility might play an important role there in securing supplies, and they might need to put hedging strategies in place. That's something that we're going to be looking at in more detail, especially when we come to the financial statements. I'm going to walk you through now the section on the soft drinks market, where we have an introduction to this particular industry as it relates to Northland. So, we're told that any drink that does not contain alcohol is classed as a soft drink. So this is a wide and varied market. We're talking about many different products. We're told then that retail sales in Northland amounted to 12.3 billion N dollars in 2016. So this is a big market. With the soft drinks market, before we get into the detail, it's worth reflecting on the trends coming up in that particular industry in recent years, and what you would notice from even reading the papers in the business section of papers is that drinks with high sugar content, they're in decline. And the areas of this particular industry that are in the ascendancy would be products like bottled waters and low calorie and low sugar versions of carbonated drinks and things like that. So we'll go on to see that this particular country, Fizz, is very dependent on carbonated soft drinks, and they have a lot of products that are high in sugar content. So immediately we start to think whether they should be looking at low calorie, low sugar alternatives and looking to get into other product lines. So we're told then that the soft drink market can be split into two areas. First of all, carbonated soft drinks, CSDs, and still drinks. So still drinks are non-carbonated drinks. So starting with the carbonated drinks, they contain CO2, carbon dioxide gas, which is dissolved in them, and this is what creates the bubbles when you open a can or a bottle of a carbonated soft drink. Alternatively, still drinks do not contain CO2 gas. So CSDs then, we're told, include a wide range of drinks. So colas, fruit flavor carbonated soft drinks, sparkling water is included in this category as well. Some of the drinks contain caffeine. A lot of Fizz's drinks, in fact, contain caffeine, and some contain high concentration of caffeine, especially energy drinks, and additional sugars go into all of these drinks. These are energy dense, nutrient poor drinks, and they're coming under attack in recent times. Sugar has become a bogeyman for many as it receives a lot of negative press now, and of course soft drink manufacturers are the target of a lot of anti-sugar rhetoric, and that's going to play an important role in this particular case. We'll see it at the end in particular when we look at a number of articles criticising the soft drinks industry. Some CSDs, we're told, are sold as mixers with alcohol, and we'll look at the split of sales in Northland between the different CSD and still drink segments in a little while. It's quite interesting to see the numbers there. Still drinks then, these would include areas, product areas like fruit juices, which are juice flavored drinks. They contain real juice, still waters, dairy based products such as flavored milk, and squashes, which are sold as concentrates and then later on diluted by the consumer at home with water before they're consumed. And we're told then it's important to distinguish between the words flavour and flavoured in this particular industry. A drink, we're told, can be sold as, say, orange flavour if it tastes like orange juice, even if it's derived from artificial flavouring. And if you're using the term flavoured, then it's because it actually contains some real orange juice. That's important for Fizz because they have one particular product that we're going to look at later on that contains real juice, so it's flavoured, and their competitors, on the other hand, are offering an artificial alternative that would not be able to use this term flavoured. Instead, they contain a flavour. Distribution channels then. There are two important distribution channels that manufacturers are relying on. In fact, there is a third that we'll talk about after we look at these two, but these are the two main ones. The first one is the off-trade sector. These comprise bulk sales to major retailers and wholesalers who are supplying smaller retailers. And then the final consumer is buying these drinks from the retailer, consuming them off the premises of the vendor. This is why they're called off-trade. You consume them off the premises of the end seller. And we're told that these are sold in packages of cans, bottles, and the serving sizes vary greatly from 250 millilitres all the way up to massive 3-litre bottles. And The major retailers are selling their own brand drinks. In fact, the own brand products account for 23% of off-trade market by value in 2016. So a couple of things to comment on here. As we said before, there is a middleman here in the form of the wholesalers who are dealing with manufacturers like Fizz, and they're passing on the product to the end retailer who supplies the consumer. And there's an opportunity presented here for companies like Fizz with the own brand products. So supermarkets will often have their own brand cans and bottles of carbonated soft drinks or even still drinks. And of course, someone needs to manufacture those, and a company like Fizz is in place to supply, to manufacture the drinks for the supermarkets to put their own brand label on them. These would be retailers with, in some cases, significant buyer power. These can be massive supermarkets, so that has to be considered when thinking about this case and thinking about the way Fizz is to negotiate with these players. The second main distribution channel is the on-trade sector. And these are restaurants, bars, cafes, where the consumer is actually consuming these drinks on site. They're on the premises, they're in the bars, etc. They're consuming the products there. And major on-trade outlets are buying either directly from the manufacturer, but there could also be a wholesaler in between, taking a cut, an intermediary, again passing on the products to the bars and restaurants, etc. Again, we're told about the different forms that these products can be packaged in various ways, cans, bottles, but also the manufacturer can provide syrups to the retailers, so in concentrated form, and what happens then is that they're pumped through a soda fountain dispenser where they're mixed with carbonated water that the retailer has on site. Bars then, we're told, often sell small cans and bottles to add to alcoholic drinks in many, many cases. There is another option of source, which I referred to earlier on, and this is where a manufacturer could strike a franchising arrangement of some kind. They could sell in concentrated form their syrups, etc., to an authorized bottling partner who would then take the concentrated syrup, mix it with carbonated water and bottle it, put their own label on it and sell it onto the end consumer, or via a retailer or via a wholesaler. And in fact, that's what Coca-Cola does. It's present in so many markets worldwide. It strikes up franchising agreements with a franchisee who buys the cola formula in this condensed concentrated syrup, and then they actually mix it with carbonated water in their own bottling and manufacturing facility. And in that case, they're putting the Coca-Cola label, of course, on the bottle, and they're selling it on, and they take revenues and pay Coca-Cola a royalty fee. That's going to be important when we look at a rival of Fizz's called Quench in a couple of pages' time. On the next few pages, we have a couple of interesting graphs which look at the different segments of the soft drink market in Northland by retail sale value. So it's important to point out, first of all, that what we see here is the revenue generated through sales to the end consumer. So this is from the retailer to the end consumer. These are not revenues taken by the manufacturers like Fizz and Quench. It's the end consumer sales we're talking about here. So looking then at the first of the four graphs, and what we have are carbonated soft drinks for on-trade sales. These represent 24% of the total value of retail sales for the Northland market. I'll tell you where I got that figure from in a little while. It will be revealed in a couple of pages, but just for the moment, you can take my word on it. And cola is clearly quite dominant here. Energy drinks are important too. And then you have some others like fruit flavored carbonates and water representing significant segments as well. But with cola, it's the dominant one here. It actually represents 9% of the total value of this market. With energy drinks then, for on-trade, so we're talking about bars, restaurants, etc. Often in bars, they're selling, things like Red Bull with some alcohol like vodka or something like that. They're increasingly popular. With carbonated soft drinks in the off-trade segment of the market then, so these are drinks being consumed off the premises in which they are bought, they actually represent 33% of the total market, so a big chunk of the market. And again, we see the importance of cola, 53% of this particular segment of the market. And in fact, it's the most valuable of all the segments of this entire market, considering off-trade and on-trade and carbonated soft drinks plus still drinks. It represents 17% of the total soft drinks market, cola here. So what I mean by that is that off-trade sales of carbonated cola represent 17% of the total soft drinks market. That is carbonated soft drinks on trade plus carbonated soft drinks off trade plus still on trade plus still off trade. So it's a significant segment of the market. It is the biggest segment of the entire market. And when you consider the sales of cola on trade plus the sales of cola off trade, it's representing a total of 27% of the total soft drink market in Nordland. So it is the big area of this particular market. Mixers, I was a little bit surprised to see that in the carbonated soft drinks off-trade part of the market, mixers accounted for 10%, whereas in the on-trade sector, they were only 4%. So mixers would be things like tonics that people mix with alcoholic drinks. You think of things like gin and tonic here. And with the mixers in the off-trade segment, you would be talking about tonics that people are buying to bring home and to consume with alcohol, hard liquors like vodka and gin at home, which is becoming increasingly popular in recent years. You think of the effect, for example, of the smoking ban in a number of countries, particularly in Europe, which has impacted bars and pubs which do less trade now, and people tend to drink more at home, where smokers in particular have the freedom to light up in their home place if they so wish. They're not afforded that luxury anymore in bars in many countries. And then we come to still drinks. So with the on-trade sales of still drinks, it is actually the smallest part of the market. Only 9% of total market value is located here. You have some important enough areas. Pure juices and juice drinks are quite important, along with bottled water. Juicy juice, which is something produced by Fizz. We'll see that in a few pages' time. This is a real fruit drink. So it's flavoured. It contains real fruit, and it's a premium product, as we'll see in a little while. It would enter this particular area of the market. And then juice drinks, these are rivals of Juicy Juice, which is made by Fizz, and we're told later on that they contain artificial flavourings. They're not considered real fruit drinks in the same way as Juicy Juice is, but they would occupy this particular chart here. And then finally we have the still off-trade segment of the market. This is the biggest segment, in fact. Okay, and you have 3 of the 5 biggest segments of the market represented here. You have pure juices, you have juice drinks, and you have squashes. So these are big parts of the Nordland market. Pure juices being sold by supermarkets, etc. Again, Juicy Juice would enter here, which is Fizz's quality, high-end, real fruit juice drink. This is the second biggest of all the segments. It represents 12% of the total soft drink market in Northland. Cola is the biggest one, you remember, at 17%. Pure juices are following behind at 12% of the total market. And then you have squashes representing 10% of the total market and juice drinks representing 9% of the total soft drink market. We're told then in the final section of this introduction to the market that retail prices are significantly higher for on-trade sales. At only 10% of soft drink sales by volume are made through the on-trade channel, but they actually represent 33% of the total value of the market. So there's a big markup on these sales. And you would ask the question as to whether Fizz is distinguishing between the different channels. Is it enacting some kind of price discrimination whereby the on-trade sector is being sold to at a higher price than the off-trade channel? That's a question worth asking. We have no way of knowing, and it's not really revealed in this particular pre-scene. What I want to do now is to jump over to the PowerPoint that VIVA Financial Tuition has put together. And here we're summarizing the most important points coming from each section of the pre-scene. So this is a good way to condense the main findings from the pre-scene and to really focus your mind on the most important points to remember. The soft drinks market is a large global market in flux. Carbonated soft drinks, we know, is the biggest segment of this particular market, but this is a segment in decline. People are more health conscious. There's a little bit of a war on sugar in the press, and that is impacting sales of carbonated soft drinks, particularly in developed countries. It's a different matter in emerging markets where carbonated soft drinks are still obtaining growth, but it's a different case in developed countries. 2 of 3 distribution channels are being exploited by Fizz. The 2 mentioned in the pre-scene are the off-trade channel and the on-trade channel. The off-trade channel, these are sales taking place in supermarkets and small shops, and the on-trade channel then, these are sales taking place in bars, restaurants, etc. And there is a third option which we talked about a little bit, where a franchising agreement is set up, and this would involve a manufacturer like Fizz providing a third party with concentrated syrup, and the third party manufacturer would then mix that concentrated syrup with carbonated water, and they would bottle it, label it, and send it out into the market in that way. And this is, as we said, something that Coca-Cola has so successfully done in so many countries, and it's what gives them their reach. We asked the question as to whether Fizz would be employing price discrimination. This is considering the fact that even though only 10% of trade by volume is taking place in on-trade premises, so in bars and restaurants, etc., this actually accounts for 33% of the value of retail sales in Northland. Is Fizz recognising that? I'm sure they are. And are they also charging a higher price to on-trade buyers? What I'm going to do now is to take a look at the graphs that were presented to us in the case study, and we're going to represent that data in a slightly different way. These are some tables that we've put together at VIVA Financial Tuition to shed some more light on the data and information that was given to us over the course of about 3 pages in the pre-scene. Starting with this first table, we were told that total sales in 2016 were $12.3 billion. We were then told that the off-trade part of those sales represented 67% of the value of those revenues, and the on-trade segment represented 33% of the value of those revenues. We were then told that the actual volumes represented only 10%, being moved through the on-trade channels, and 90% was actually moving through off-trade channels. So we know from looking at those figures that on-trade is applying a big markup to the drinks that are being sold in bars and restaurants. Even though only 10% is moving through those channels, they're really charging a high price for the goods that they're selling through those channels. When you split then those numbers out and you look at off-trade and on-trade, off-trade, as we said, represents 8.2 billion N dollars, and it's split again between carbonated soft drinks and still soft drinks, and it's almost an even split between those two, 49% for carbonated, 51% for still, and that gives an almost identical revenue split, about 4 billion N dollars for each of those, with a total market size then of about 33% and 34% respectively. With the on-trade channel, it's 72% of the value of those revenues coming from carbonated soft drinks, and the minority coming from still drinks, 28% for those. So the total market of still drinks being sold through on-trade channels is just 9%. Digging down into those figures even further, and we look first at carbonated drinks. And looking at the percentages that were given to us, it's interesting to see that cola, as we said before, through the off-trade channel especially, is very dominant. 17% of the total market in Northland for soft drinks is going to cola, being sold through off-trade channels. It's not really surprising. We know that cola is a huge seller in supermarkets and in smaller shops, so not really surprising to see that. And it's also a big percentage of the total revenues going through the on-trade channel, so going through sales of cola in bars, in restaurants, etc. Not entirely surprising that you can see that the other parts of the carbonated sector, energy drinks, etc., fruit flavored carbonates, water, lemonade, so we'd be talking about fizzy water, sparkling water in this case, are not representing a really significant portion of the total market. When we look at still drinks, digging into the numbers, we can see there are some very important segments represented here. Pure juices, juice drinks and squashes are a big part of the total revenues for the Northland market in off-trade sales. So we'll see that they are representing, for pure juices in the off-trade channels, 12% of the total value of the market, 9% for juice drinks in the off-trade channels, and 10% for squashes in the off-trade channels. Adding up then the off-trade plus on-trade channels to give a total percentage of total revenues in Northland for each different product line. So for cola, energy drinks, fruit flavoured carbonates, all the way down to dairy products, this is what we see. Cola is the dominant player. It represents 27% of the total revenues of 12.3 billion. So 3.2 billion N dollars are going on sales of cola to the end consumer. That's through both the off-trade channel and the on-trade channel. The next biggest player is pure juices. Those are real fruit drinks, and we know that Fizz is present in this particular product offering with its Juicy Juice product line. Juice drinks then, made from not real fruit but fruit concentrates, they represent 10% of the total market, 1.2 billion N dollars. And squashes are important too, representing 11% of the total market. Thinking then about where Fizz is present. So Fizz is present in some of these important segments of the market, but absent from a few of them. Overall, we can say that Fizz is present in about 64% of the market. You'll see that, okay, it's got It's present in the off-trade sales of cola. It has an offer there. But for on-trade sales of cola, it has no offer. And it's missing out there on 9% of the total value of the market. So we'll see that in detail later when it talks about Fizz's product offer. These figures will make more sense then. Other areas where it's absent is in juice drinks made from concentrates, which represents in total 10% of the market, with, if you consider on-trade plus off-trade sales of juice drinks. So again, it's leaving that money on the table. It's also missing out, for example, on lemonades. If you look at lemonades in both on-trade and off-trade sales, they represent 7% of the total market. So Fizz is present in many areas, but it's missing out on other areas. So most notably cola, on-trade sales, and in lemonade sales.